creating wealth, freedom, and security using real estate investing. This is Get Real Wealthy. You're watching Get Real Wealthy. All right, so on this episode, I wanted to demystify the differences between what's happening in the residential market and what's happening in the commercial market. So in the residential market, you have 1 to 4 unit properties. And those 1 to 4 unit properties are based on what's called the comparative model. So if your house is a 3-bedroom, 1-bathroom house, and the house next door from you is a 3-bedroom, 1-bathroom house, it sells for $700,000. Your house is most likely close to the value of $700,000. Now, whatever the differences in that house are going to mean that it's going to be worth less or more, but in general, that's what it looks like. And in the current market across Canada, we're seeing differences. Now, I hate to generalize by saying across Canada because every market is different. The market in Yellowknife will be different than the market in Toronto. And the changes that happen in each of those markets are very different. But let's use the GTA for example. Where we're seeing is a 20 to 25% decrease in prices over the last few months. Now, you always have to ask, compared to what? So if you compare that price drop to the beginning of January or let's say March this year, you see that 20 or 25% drop. If you compare that between this year and last year, you actually see a slight increase. So if I did, for example, August to August, you may actually see a slight increase in prices. So you actually always have to say compared to what. Now, the residential market, like I said, is based on a comparative model. It's open to a lot more people. You have people's emotions that are part of that. There is a lot of what's happening now is there's a lot of supply on the market versus the demand that's buying that. And we're seeing days on the market increase, meaning before you put a house on the market and it might have sold within 20 days. Now that same house that you put on the market is taking 2 months or 3 months, which is more of what a balanced market is. So that's the difference right now, or what's happening in the residential market. Now the commercial market is very different. So when people ask me, are you, what's going on with the market? What's going on with your business? It's very different than if you ask me about my residential portfolio versus my commercial portfolio. My commercial portfolio is based on apartment buildings that are 5 or more units. And the way that you evaluate a commercial portfolio is based on the net operating income. And the net operating income is your income minus your expenses. And then you divide that by the cap rate. And the cap rate hasn't really changed very much in the last year. There's been slight variations, but apartment building owners are still asking for what they were asking for just a few months ago. Maybe slight variations, but not a lot of difference. The other thing that you need to remember about apartment building owners is they're not emotionally attached to their real estate as opposed to a residential buyer. So there's a lot more emotions at play. Now, if you're a new apartment building investor, that might be a little different because you may overpay for something just to own it. Whereas an experienced operator of an apartment building, when they're selling their asset, they just pull it off the market if they're not willing to sell it at a particular price. So the net operating income I've noticed for apartment buildings hasn't really changed. So if you saw something that was maybe like a 4.5 cap rate in the last 6 months, maybe it's a 4.25 cap rate, but most likely it's still not going to sell until it's a 4.5 cap rate. Very slight variations. The other thing that you need to remember is there are just not as many properties in that space. So for example, if you're looking at between 5 units and 20 units, and we sectioned it off to just Ontario, we're probably looking at 5,200 buildings in total in all of Ontario. So you can compare that to any city or town where there's 1 to 4 unit properties. There's probably 10 times as many of those in just one city or town in Ontario versus 5,300 units from 5 to 20 units across Ontario. So the competition is very different when it comes to that. So when you ask me how the market is, I'm going to ask you, which market are you talking about? The residential market, or are you talking about the commercial market? As they are very different. I haven't seen net operating or cap rates change very much, and as long as that net operating income is there, the value of the building is there. You're buying a business when you're buying a commercial property, whereas when you're buying a 1 to 4 unit property and you are an investor, you treat it like a business, but it is evaluated very differently. So I hope that helps you. Whenever you ask me how the market is, remember to specify, is it the residential market or is it the commercial market you're talking about? Until then, have a great day, everyone. If you want to learn more about me and what I'm doing, go to quentindesouza.com, and we'll see you on the next episode.
Make sure to check out getrealwealthy.com. Until next time, I'm Quentin D'Souza. Get out there and take action. The views and opinions expressed in this podcast are provided for information purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to getrealwealthy.com.